Hey everybody, hey traders, Chris over here. This is a A1 Trading Pulver Alerts update, Monday afternoon, just after 2 p.m. on the 22nd. The market is hitting all-time highs again, and I guess it's not a surprise. That's pretty much par for the course. This market is relentless and will not stop going down ever. But look, what is driving the market today? It's not market breadth. It is Apple and Nvidia, which are two of the three largest companies in the world that are up a decent clip. 3.66%. Apple's nearly at all-time highs. Nvidia, I'm a little frustrated by Nvidia because I had a post-earnings trade, and there was literally a nothing burger for like 2 to 3 straight weeks where price didn't do anything through earnings, and then we came out swinging today with like a big 3.5% rip to the upside. So we're back up near all-time highs on Nvidia. Apple's creeping up near all-time highs. Two of the largest companies in the world that's dragging the entire market with it. Because if you look at market breadth today, you see here that almost 50% of stocks are down. It's like almost a 50-50 split. We have 49 declining, 48.1 advancing, but your advancers are just two monsters, and it's enough to keep this market pushing to all-time highs. So Apple, like I said, just off those all-time highs. Nvidia hasn't done squat in a couple of weeks, and here we are poking all-time highs today with a one-day push. Amazon, not that far away from all-time highs. Broadcom, just after that little gap higher. Google, relentless through these all-time highs. Meta, just back near all-time highs. Microsoft is still in that decline, but coming back to some nice moving averages. This is the 50-period moving average. Netflix, I'd like to see a buy off the 200. Nvidia, I said all-time highs. Tesla, decent gap up, fading a little bit on the day. I'm still buying dips on Tesla. I mean, if we pull back to like 360 or 358, did lots and lots of ratio spreads back down here into the sub 300s. I'm happy to own some shares of Tesla. My narrative on this one is it's not just an automaker. There's more to it. This is AI, embodiment of AI. This is robo-taxis. This is a very pay it forward. I know it's high value. I know it's overvalued. I know it's price to book, price to sales are ridiculous. I know they've been missing on. Doesn't matter. To me, this is if you're willing to invest in Bitcoin and be future oriented, profit margins in AI, I feel like Tesla has to be a bid. On top of that, you have one of the biggest stakeholders in the company, Elon Musk, that is buying lots and lots of money of his own company, $1 billion of shares, and this thing ripped on that news in addition to other stuff. So I think the future still remains pretty bright. It's like a love it or hate it type relationship, but you sell a lot of puts, the premiums are high. I make a lot of good profits on Tesla. Anyway, that's that. Let's go back to the indexes here. SPX. So I want to point this out. I mentioned this last week during FOMC. So we had FOMC on Wednesday, big noisy indecision candle, which I said was probably going to be the result because it was highly anticipated of that rate decision. This is the high to low candle for FOMC. And if you can see this line above, it says FOMC candle 100% breakout. So we have the high broken out on Thursday and follow through on Friday and follow through again today. I wouldn't be terribly shocked to see this 100% breakout hit, and then the market starts to make its way back to maybe gravity, which is the 21-period moving average, or even this 50-day moving average, which I have been watching and waiting for a while. I did a little AI macro study, and we are in the third or fourth largest stretch, bar count-wise. I think this is the fourth largest bar count away from the 50-day moving average in the SPX. So before this, I think we're at 93, 94 days right now. We had a 102, 105, and 112 before this. I think the record was like 128, and that was like .com before we collapsed or shortly after the collapse. So it can go higher, but the points away from this is, I think what's driving me crazy is we're now 270 points above this thing. I just think there's got to be a little bit of a magnet here somewhere. Pull back to the 21-day, pull back to the 50-day. Maybe we don't get it until, this week there's not a lot of news. It's employment claims, GDP. We have some PMI numbers coming out of globally. We have Eurozone and US PMI this week. Core PCE on Friday, and then we get into next week, wrap up the month, wrap up the quarter, and we have non-farm payroll on October 3rd, which is probably going to be a huge disappointment because with strict immigration policies, the US is not going to be putting as many jobs out there per month, and the jobs that are being produced are pretty much all in healthcare. So anyway, long story short, don't fight the melt up. I'm cautiously bullish. I think the market at least has to have some type of pullback. It's driving me actually technically crazy. Okay, it's technically driving me crazy that we're not having a pullback. The problem is there's no catalyst. So I am cautiously bullish. I'm still positioning. I've still got dry powder. I've got money that I want to be deploying. I'm just not deploying a lot. I'm still waiting. This FOMC candle will matter. This low will matter. If price comes back and takes out these levels, we are going to see a decent correction. I would say probably in the 5 to 7% range, maybe 5 to 10% range. If we come back to the 200 moving average, this is kind of crazy. I think this is now double digits. If we come back to the 200-day from right now, that puts us up to about 9.7% on a 200-day moving average. That's a pretty healthy pullback. I just don't know if we're going to get it. I think the market still is very interested in buying the dip. I would like to line up and be one of those dip buyers. Problem is where's the dip?
With Pulver Alerts, you get access to the complete log of all of Chris Pulver's trades. But who is Chris Pulver? Chris has over 20 years of trading experience, and he's a licensed money manager. He trades all aspects of the market, including Forex, stocks, ETFs and futures, crypto, commodities, and just about everything else. Let's talk more about where you can find these trades. Inside of the A1 Trading Discord, on the left-hand side, you'll find Chris's section. It's broken up into different categories to make it easier to find the trades you're most interested in. Here, you can browse his trading journal, where he shares videos and general market analysis, his indice trades, commodity trades, Forex, stock and options, and his futures trades. All trades come with analysis, including entries and exits, risk to reward, and more. We're very excited for the future of Pulver Alerts, and we hope you are too.
You know, this little FOMC 1% sell-off is not a dip to me. This little, 3% correction was a dip because the VIX spiked up to 20, so I did sell some premium. But after that, it was VIX sub 20, VIX sub 20. These were, 1.5 to 2% pullbacks. That's it. Like, that's all we've gotten. So we're almost starting to break the structure of a rising wedge, which is also increasingly frustrating that we're just not getting pullbacks. One thing I want you to keep an eye on this week, one thing I'm watching for my Pulver Alerts is I'm looking for some currency trading. I'll try to find some good currency pairs. I might be leveling into something on Swiss yen. It's not ready yet because we haven't broken the trend line, but look for some Pulver Alerts where I'm going to start lining up some sell. It'd be some sell stop levels where if price crosses below 181, I'm going to go 181 and probably a 179 and maybe a 177. If these get filled, these are going to be very small to absorb some type of break, retest on a swing, stop loss above the highs, and then see if we can proceed to go lower. Okay. And if it keeps going higher, then I'll adjust these levels. But for me right now, it's like the clean sweep of those lows would be that we maybe get a turn on the Japanese yen. I don't know if it's going to happen. This whole talk of the Japanese yen or the Bank of Japan trying to raise interest rates, I don't think that's going to have the same ramifications as what we saw last year when it was this huge decline in Japanese yen strength. I think that the market is leveraged very, very differently this time. But one never knows. I mean, the Fed cutting rates by the next year, 150 basis points, and the BOJ raising rates by 25 to 50 basis points, that does take away a little bit of that firepower in the carry trade. However, unless I see a technical sign to be short against something like the Swiss yen, I can't guess. So I'm waiting for some confirmation to either one, give us a topping pattern, slide down here and sweep these levels, give us a head and shoulders, give us something we can sell, and then break and get confirmation and have, kind of a fundamentally and technically driven currency trade. But that remains to be seen. On the indexes, like I said, watch the FOMC low. You've got two levels to watch really carefully. Right around 6,700 to 6,703 on SPX is the measured move of that 100% FOMC breakout candle. So this is your FOMC. We're nearly hitting the top of this. I think once we hit 67 to 6750, I would expect to see some type of pullback based on the distance away, based on the time away, based on the bar count and points. But we will see. 6,500 is a huge quarterly level. That's a JPM collar trade at 6,500. It now is acting as a floor. The question is, are we going to come back and pin it? Maybe there's a gamma pin there by the end of the month, end of the quarter, but to be determined. Okay, what else? That's kind of it for right now. The market just continues to make all-time highs, and it is kind of driving me crazy technically, but I'm still enjoying the melt up. I'm just off all-time highs. My highs for the year are at 586. I'm at 570. So I'm still watching and waiting and just playing the game. I still have plenty of cash to deploy. I'm sitting around 50% cash right now, just under it. And I want to deploy it. It's just give me something. Give me something that I can be patient with. Give me something I can increase probabilities with, and hopefully deploy when the VIX is a little bit higher, so I can sell some premium and have the expected move be way bigger than the actual. But I think we are heading into some pretty interesting spots where S&P and NASDAQ and Dow and Russell all hitting all-time highs. Rotation, the small caps could perform very, very well. If you've been riding the Russell these last couple of months, it's been extremely fruitful. This has been a really good rip for the last couple of months. I mean, the Russell has made just an incredible comeback, stretching all the way to all-time highs. And this run from the bottom in April, which obviously was a huge fallback here, but I want to measure the up move. So May's open to now, 25%. We have outpaced, especially August and September, we've outpaced small caps versus what the large caps have been doing. But the nice thing is they're all at all-time highs. So I just think that continues to feed momentum. One thing I want to watch for on Wednesday, Thursday this week is the AAII sentiment. I know you have that indicator pulled into your edge finder. If the bulls continue to print a larger number and the bears print a smaller number, I just think on the short-term contrarian play that it's getting people off the fence. People are going back to the stock market in at all-time highs. I'd like to see a little bit of a shakeout just to make sure that it's, let's rattle those investors that feel like they can just sit this thing out for an April correction, sit out this 30 to 40% rally, and then they get in at the highs and think everything's just going to keep going up. Again, call me contrarian, but that's what I'm watching for. So we'll get a read on that Wednesday. Come into Thursday's trading, we'll check it out. But we do have some news: employment claims, PMIs, core PCE. This is our final full week of trading for September, and then we wrap up the month and the quarter next week on Tuesday. So I'll see what I can find pulver alerts wise. Keep an eye on it. Looking for some currencies, looking for some indexes, some stocks, and I posted a couple trades last week as well. Dollar cost averaging on GLD and SLV, waiting for those levels. They are still, look at this thing. Gold making some all-time highs. Like, this is just not mucking around, man. Like 3,800 measure move. I mean, we're a long ways away from this 200 moving average, but could we hit 4,000? Could we bubble up on gold? Maybe. Okay, silver. Again, just a great rally. Now we're at 44 and change. I've got all-time highs here at 48, 49. I think we get there. So gold and silver doing really, really well. And then Bitcoin is not. So we're getting an interesting look of everyone's flooding into gold and silver, which obviously isn't a bad trade. I think there's still some technical levels to be watching for. Make sure you're not just all in without having some protection, or we're looking at dollar cost average in on some better pullback levels. So, all right, I'll wrap it up there. Keep it short and sweet. Look for some pulver alerts this week, and look for me in the live sessions. I'll see you soon. Thanks. Bye.
Did you know we do a live trading show Monday through Friday with guests from all over the world? To get notified when we go live, click the bell button next to the subscribe button, or check in at 9:30 a.m. Eastern Time. We have helpful, free content in the description below and on our website, a1trading.com. Thanks for watching today's video, and we'll see you tomorrow.